Assalamualaikum. These are our group infographic poster. My name is MARSYA. The fundamental concepts of investment is the act of allocating resources, for example capital, with the expectation of returning profit and income. Investment concept involve assigning your available assets, whether financial, physical, or intangible, to venture activities or instruments with the intention of generating returns. For example, purchasing property as an investment with returns expected from rental income and property value appreciation.
Hi and Assalamualaikum. My name is YUSRINA SABILA and I will discuss about relationship of risk and return. Risk is a possibility which actual return may vary from the expected return. Meanwhile, return is a future value amount that we are going to get from investment activity. Risk and return had positive relationship.
Next, in investment management, we have divided by three parts, which the first one is capital appreciation, income generation, and capital preservation. The first one is capital appreciation, which refers to the increase in the principal invested in the company stock. For example, in the infographic show as stock. While for the second one, income generation, we can say that it is the monthly income from the investment, such as rental a house. For instance, like fixed deposit. Last but not least, we need to protect capital from loss, which refers to the capital preservation, as I mentioned in the infographic, such as T-bills.
My name is Nazurah binti Shukri. The first risk factor is market risk, which means the possibility of losing money due to the change in market price. These changes are often caused by political, economic, or global events that affect the entire market. One of the hedging mechanisms is timing technique. Buy and sell stock at the right time to reduce losses and increase profits. For example, selling your stock before a predicted market crash.
Assalamualaikum. My name is AIDA Safari. Inflationary refers to the potential for the value of investment to decline over time due to rising prices eroding purchasing power. To manage inflation risk effectively, these are the strategies. Number 1, diversify your investment portfolio. A well-balanced portfolio that includes a mix of asset classes like stock, bonds, and alternative investment help reduce impact of inflation. The second one, invest in real assets. Real assets such as real estate, commodities, or infrastructure tend to perform well during periods of high inflation. For example, real estate properties may generate high income during inflationary times. Last one, consider inflation-linked bonds, which is Treasury Inflation Protected Securities, TIPS.
While next is credit risk. Credit risk means there have a potential loss that may occur when a borrower is unable to achieve their obligations as agreed upon. However, there is a ways on how to manage the risk through credit assessment and diversification credit exposures across different borrowers.
Interest rate risk is a fluctuation of interest rate that will affect the future market values and the size of future income. Hedging mechanism that used by interest rate risk is to choose short-term fixed income and hold security until maturity.
Primary market. This is organization raise capital by issuing and selling new securities for the first time. Examples include IPOs, where companies go public to fund expansion, and government bond auctions to finance public infrastructure or service. Function within the ecosystem. It is vital because it directly connects issuers with investors, providing the funds needed to support large-scale projects and economic growth. The second one, which is secondary market, this is where investors trade securities that have already been issued. Stock exchange like Bursa Malaysia offer a safe, transparent environment for buying and selling these securities. Function within the ecosystem, investors can easily buy, sell, or adjust the investment without being tied to them for a long term.
Next, the regulatory bodies in Malaysia could be categorized as first, Bursa Malaysia. It acts as a regulatory to make sure good flow of transaction, for example, conduct of business, trading, and settlement. Secondly, Securities Commission Malaysia is a body regulating Malaysia capital market, which doing activities such as supervised exchange and also doing a house clearing.
Investment intermediaries operate as a link between investor and capital market. They help to manage risk, provide expertise, and ensure smooth transactions for institutions and individuals. Stockbrokers, bank, and mutual fund manager are types of investment intermediaries. For example, Rakuten Trade help investors to buy and sell stocks and bonds.
Derivatives are financial contracts whose value depends on or is derived from the performance of an underlying asset. The key type of derivatives are futures contracts, a legally binding agreement to buy or sell an asset at a predetermined price at a specific date in the future. It's typically used for hedging or speculation in markets like commodities, currencies, or stock indices. And second one is option contract. It is a financial contract that gives the buyer the right but not the obligation to buy or sell an underlying asset at a specific price within a specific time frame.
The next type of investment is real estate. Invest in a property such as residential, commercial, or industrial to earn income through rent or capital gains. For example, renting out an apartment or selling land at a higher price.
We're moving on to the chapter 3 based on types of investment. There are several of types. One of them is bonds. It is a fixed income where individuals lend money to government at a certain interest rate and amount of time. I also provide some of examples for bond categories such corporate bonds, government bonds, and agency bonds.
The third sources of investment including stocks, which is a security giving stockholders a share of ownership in a corporation. Common stock and preferred stock is the example of stocks that also could be called as equities.
The last type of investment is cryptocurrencies. It's a digital or virtual currencies secured by cryptography. It is highly volatile and high potential returns. For example, Bitcoin, which is the most popular and widely traded cryptocurrency, Ethereum, a blockchain platform supporting smart contracts and decentralized applications, and stablecoins, cryptocurrencies pegged to fiat currencies like the USD.